Now, if you're a technical trader, you are going to be very familiar with identifying technical patterns. Is it candlestick patterns like the bullish piercing line? Maybe you're looking at dark cloud cover, a bullish harami bar, maybe a head and shoulders reversal, double tops, double bottoms. You're very familiar with them. But have you ever thought about combining those technical signals with seasonality? Now, this is one of my favorite personal ways of trading seasonals, is using technical setups that align with historical market tendencies just to try to gain stronger conviction and timing precision. You can really get some great opportunities like this. And I just want to outline to you how you can use seasonality in this way. So what you can do, you can time entries and exits with seasonal data. And you can just use seasonal windows to fine tune the entry and the exit timing. So let me give you an example here. Here's the seasonality chart for gold. And we can see there's two pretty strong windows in the year, March and April, July and August. So what we can look for here is, looking at March and April, you could look at that and say, okay, coming up, I've got this really decent seasonal pattern around middle of the March to middle of April, roughly 80% winning trade percentage, 3.48% return, right? So when you'll know that that strong seasonal window is coming up, mid-March, you can have a look. And this was a trade that I was looking at the time. And what did we have? Well, we had a very, very nice, strong move higher, right? And a pull back against the trend. Look, it's a great bullish flag. Look at the way that price goes up, 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 strongly moving higher. We then have that pullback against the trend. And you can see here, I've got the flagpole still in place from when I was using this particular setup. And then you look at, right, the height of the pattern. And that's your ultimate target. You have the bullish flag, it breaks out, and you've got conviction that this is a great move. And lo and behold, gold moves up and hits its target. And you can see here, there was a target of just around 6.5%. So do you see how that this strong seasonal pattern aligned with this nice technical setup? And once you had this breakout here, right, of this bullish flag, it was a great confirmation to go long, and you knew, look, that the seasonality was supporting it. Now, you can combine that historical seasonality with your technical setup to also manage risk. Now, looking at this pattern, you see 80% winning trade percentage. What was the maximum drawdown? That's really helpful. So the maximum drawdown here was 12.21%, but that was in a losing year. The next biggest maximum drawdown was 7.20%. That was in a losing year. But what's the biggest drawdown in a year that saw ultimate gains? You can see the biggest drawdown in years that saw ultimate gains was actually 2.50%. So straight away, you can see that with this seasonal pattern, there hasn't been a time when there's been a drawdown of more than 2.5% that has been a winning year. So straight away, that tells me, okay, right, 2.5% is a reasonable kind of stop placement. So you could go back here and you could look, how does that respond to your actual pattern? You can look here and you can see, look, breaking out the bullish flag pattern, you would want your stop the other side of the actual pattern. So you can see here, actually, the stop you can get is pretty tight, 1.5%. So it's quite a narrow stop, but you know that the biggest price has drawn down and still been profitable was 2.5%. So you could, for instance, say, okay, I want to give this trade a little bit more room. So I'll have my stop at 2.5%. Then you can look back and start looking at targets. Well, what's the maximum gain we had? You can see the maximum rise in the winning year was 18.49% in 2020 and 10.59% in 2024. So you can see actually there have been some outsized gains. Even though the average is 3.48%, there's been some really strong years, 18, 10%. So that may have given you the conviction to think, well, actually, maybe I can let this run a bit further. And ultimately, you can see, look, price moved from the tracer pattern 10% higher in that initial move up, right? And it has subsequently moved higher, but that would tell you, okay, well, if I get once again up to 10%, that's the second largest gain that there's been in this seasonal pattern. So that starts to help you with where might I take profit? Okay, 10% might have been a really good logical area, especially when you saw technically moves up, slows down. We can't make those fresh new highs. Now, you can also use seasonality in a different way, right? You can use it to generate trade ideas before the chart even sets up. Now, look here at Microsoft. Okay, now Microsoft has a really strong March to April period, and from March into the middle of July, you can see, look, you've got this 86.67% winning trade percentage. That's great. And look at that average return, 13.99%. So you might have said, okay, I am about to head into this strong seasonal pattern in Microsoft. So why don't I go and have a look and see if there's any sort of potential technical signals around this time. So off you go to Microsoft. And what do you see? Well, you start to see something very, very interesting. You got this pullback against the trend. You can see price is holding above the 200 exponential moving average, testing the 100 exponential moving average. Price is clearly an uptrend. And then what do you get? In the month of March and April, you get this beautiful reversal series of patterns. And you actually get two reversal patterns. Now this is a great potential trade again. You can see, look, you've got volume increasing on a bullish engulfing bar. So price is a bullish engulfing bar, totally engulfing the previous week's price action. And then look what you get towards the end of April. You get a bullish piercing line pattern. Do you see that price gaps lower on the week's open and then closes above the 50% of the previous week's candle? That is a very clear bullish piercing line pattern. So you've actually got three things here. You've got a bullish engulfing bar on rising volume, confirming a potential reversal. You then got a bullish piercing line pattern, confirming the bullish engulfing bar reversal and releasing a new potential signal, as well as a trend line break on the daily chart. And you can see here on the daily chart, you've got a very nice trend line break, confirmed, retest lower, but then on the weekly chart, the bullish piercing line is in play. So you can think, okay, that's great. Now you can use seasonality to help me with stop placement and targets. What's the maximum gain? What's the maximum fall we've had? Maximum drawdown in a winning year. So 12.16 losing year, 14, right? So we have had a fall as large as 14.74% and still been a winning year. So that tells you, okay, that's quite large, that stop. So let's have a look what that would relate to. 14.74%. That would mean a stop here underneath the 200 exponential moving average. So you'd have two choices here. You could use a volatility based stop using the average true range, and you can see, well, look at the average true range for this period. It's quite volatile, 24.80. So you might use double, 2.5 times the average true range for a swing trade for the week. So you might have a $50 stop. That'll be 380 down to 330 here. So very similar. So a volatility-based stop based on the recent volatility, or a historical stop based on the largest fall when it still had gains. See there, 14.74%. Either way, Wouldn't have been unreasonable to think, okay, I have a 14% stop underneath that 200 exponential moving average. Made sense in terms of the technical reversals, made sense in terms of the stop placement just from the broad trend holding above the major moving average, and also made sense from the seasonality and what to expect. What's the maximum gain? 36.45%. Wow, right? And there's been multiple years, 20%, 20%. There's been 4 years you've got 20%. So straight away that tells you, actually, you could look for a pretty decent gain. And where's 20%? 20% is basically up at those highs. So you might think, well, that's not unreasonable for me to try to target up at those near-term highs. And in the end, you got a breakout. But even if you didn't get a breakout, look, that's about 20% higher and a great opportunity that was there. So you see, seasonality, right, can act as a great trade idea filter. It just highlights where you can focus your technical analysis. I love using seasonality in this way. And seasonality just enhances every stage of the technical trading process. Before the trade, because it can improve timing and selection. After the trade, because it can improve risk calibration and expectations for the target. You know, you can try Seasonax free for 30 days and see how aligning seasonality with your technical strategy can sharpen your edge.